Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of LME 3-month copper and aluminium. I'll start with LME 3-month copper. After 5 consecutive sessions of bearish black crows, yet with the market mainly recognizing them as indecisive spinning tops, Friday saw a change, if a mild one, with a small bullish harami. Prices closed back up over both the flatlining medium moving average, currently 94.55, and a slowly rising short medium moving average, currently 94.76. Interestingly, the low of the day was held up once again for the third consecutive session by the rising long moving average, currently at 93.62. Now, as I pointed out repeatedly in recent times, we can still see that the market is really having a hard time deciding if the recent moves lower should continue or not. Until late last week, the action had seemingly been centered around the April 2020 to date optimized uptrend, currently at 95.91. Well, it's beginning to look as if that trend line is back on as the main indicator for the market, even if it is a currently resistance above. So far today, a higher open, this time based on the combination of the medium and short medium moving averages, and a move up towards testing the upper April to date optimized uptrend and the February 2021 high at 96.19. LME 3-month aluminium. A new recent low on Friday, the lowest since late July, but also an indecisive spinning top. The market pierced the old trendline extension, currently at 25.36, of the May to August ascending triangle, but did not manage to get any further lower, as below we have the rising long moving average, currently at 24.95, which the market chose to avoid testing. Overhead, we still have the 50% Fibonacci line of the 2021 move so far at 25.86, which seemingly capped the market on Friday. I've recently highlighted a feature here as a potential big pattern mover. It is the broken mid-February to date uptrend, currently at 26.84. As I previously explained, I have been a little unsure as to whether this market has really formed such a large pattern, but the sureness has grown a lot of late last week. It is to regard the action since June as a bump and run reversal top. Why the mid-February to date uptrend? Because this uptrend would be ideal as the trend line for such a bump and run reversal top pattern. I know it is early on, but I feel obliged after recent week's actions to give you some ideas on the downside for such a pattern. So initial target X for such a move would be in the 23.53 area. Now there will be obstacles on the way, most notably the next dynamic support below, which is the previously highlighted rising long moving average, currently 24.95. But I can only say what I see here. Additionally, I have discussed the idea of the middle of last week until the middle of this week being part of a bearish halfway hesitation, stroke bear flag type move. In this case, target X1 is a little closer in the 24.50 area for that. I'm sure there are other patterns in here, but these are the ones I can see right now. So far today, a slightly higher open and a try up to the 50% Fibonacci line at 2021 and subsequent rejection. Below we have the slightly higher low today than Friday, again prompted by the super key rising long moving average that's below. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with these broadcasts. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.